Welcome back to the FEG Tax Package. This is number 2 in a series of educational videos designed to help you better understand tax planning versus tax reporting. Now remember, there is a difference between the two. Tax planning is what we need to do by year end. So time is of the essence. Once you get to Thanksgiving, a lot of things just get lost on the calendar with parties for Christmas and everything else. And so our focus at the Financial Enhancement Group on tax planning really is getting people in good order by the end of September and taking full advantage October and the first 2 weeks of November, having a lot of actions that are set up for us to do on your behalf toward the first part, middle part of December. So here we go. This part would be titled, and I'm sure they'll put it on the screen for you, but it's called Reading Your Return. Now, it's always fascinated me that when we send you financial statements, your 401k statement or your portfolio at the Financial Enhancement Group, people tend to get it out and they pore over it. It's what I call lagging indicators, by the way. You're getting numbers that have already occurred. It doesn't necessarily tell us a whole lot about the future. Tax planning is preparing to tell the IRS the story, right? And yet, most people pay no attention to their tax return, which I will always call a one-hit wonder. You get it back from your CPA firm, and you probably moan and groan about the amount that you paid. Most people do, regardless of what it is. And then we stick it in a drawer and we ignore it until next year where we merely repeat. And no different than a financial report or a statement, it's a lagging indicator. The year is over as of December 31st. You're not doing this until April. And so there's not a lot of proactive stuff that you can do. I'm going to encourage you just to take a few minutes and to get that return out and really learn how to read it, how to understand it, and to figure out what's going on. So this will be a 2-part video. You're going to get this one the first week, and then we'll give you one next week that tells you what lines are really critical. The first thing to understand about the United States tax code system, going all the way back to 1913 when it was truly established. There was a smaller one in the Civil War era, but 1913 is really when a lot of this stuff started. And our tax code best resembles a series of stair steps. Now, I want to remind you, I've got the fiduciary focus up here, right? So again, if you're doing this on your own, that's your business. If you work with a fiduciary, that's our business at the Financial Enhancement Group. We'll always focus on risk and volatility. We give you the market carver every week to help you understand what's going on in the economy and the market. Remember, they're two different things. We professionally fight to reduce fees and expenses, two separate issues. The expenses are the ones that get most people because they're hidden. You don't even know that you're paying them. Last is the real return. It's being cognizant of what's going on in the inflationary world and how it affects your long-term plan. And believe me, inflation is a hidden monster. This is not a new thing. Inflation has been around for a long time. But the focus of this series really is on tax planning. So understanding the concept of tax planning really goes to the basic principles of what happens with taxes. Next week, we're going to talk about how to read your return and what lines you really need to pay attention to. But for now, just understand this component. When you make a dollar, when you have income that is either earned, W-2, or you run a business, or it's passive, interest, dividends, capital gains, rental income, etc. When you make money, you proceed up a series of stair steps. Now, those steps become critical in understanding. You hear people talk about their tax rate. And the majority of time, people are talking about what their last dollar was taxed at. That is referred to as your marginal rate. But in order to do the best tax planning, you've really got to understand the intricacies of how it works along the way. That first step, after some deductions, which we'll talk about next week, that first step is taxed at 10%. Right? So that block of money is taxed at a 10% rate. And then when you make a dollar more than that, you move to the next stair step. That's at 12%. And when you make a dollar more than that threshold, you move up to 22%. Now, This has always fascinated me when you think about this. I'll have people come in. I take care of an awful lot of engineers. And, math is math, and we'll discuss the differences between having an average return of 6% versus an average return of 7%. And over 30 years, it is substantial. Here's the thing I want you to understand about taxes, though. Taxes are a one-hit wonder. Right? So at the end of this year, at the end of 2022, you're going to file a singular return, and it is going to be done. And what you owe the IRS, they're actually going to take the money, and they'll keep it. But this tax is a one-hit wonder. And when you go from 10% to 12%, some people say, it's only 2%. No! That's a 20% increase in taxation. When you go from 12 to 22, it is almost a doubling of what happens. These stair steps continue on up all the way up to 37%. Now, again, your average rate, which is what you may hear CPAs talk about, is called the effective rate. That is the average tax rate you pay on each dollar that you earn. When I talk to people about distribution, I will tell you one of the two goals in distribution is the one is the volatility between distribution points. That's why you have to be invested a different way when you're actually taking money out. But secondly is the tax rate, the average tax rate you pay on each dollar you spend. That's where I'm talking about the effective rate. But when you're doing tax planning, when you're preparing yourself for that financial journey, not what you're pulling out today, but what we're looking forward to in the future, when you're talking about that, what you really want to know is your marginal rate. And that is where your last dollar is actually being taxed. So understand the federal tax code system is best resembled in a series of stair steps. You want to know what your last step is, your marginal rate. You want to know what these thresholds are. You do want to know, and your CPA will always tell you, your effective rate, the average that you pay on each dollar that you earn. And then one last little minor consequence is the way that you file. Now, some people say you mean electronic or send it in. No. Standard or itemized? No. We'll talk about that next week. What I'm talking about is, are you filing as a single individual? Or are you filing married as jointly? Because these stair steps change. Remember I said there's a threshold. And if you're married filing jointly, the threshold is larger. If you're filing singly, it's contracted. It's still 10, 12, 22, all the way up to 37%. But the amount changes based on your filing status. Here's what we all need to remember. Our filing status will change over time. Either something will happen to my bride and I, Barbara, at the same time, and we'll file our final tax return, and then my heirs will have a new set of tax standards, or one of us will pass. And when that happens, the other one will be filing as a single individual. These steps will become smaller in terms of the amount of money that they can have. When I tell you the fiduciary focus really is based on risk and volatility, that day-to-day market volatility that goes on, that people are so intrigued with the news and everything else. And when I tell you it's really about fees and expenses that erode what you've worked so hard to save and accumulate. When I tell you you have to beware of the big bad wolf, inflation, the real return, what do I get after prices went up, my purchasing power, people still ignore this tax planning. And we have to understand, even if, and Lord knows that's not going to happen, but even if the IRS didn't change the tax code, your filing status at some point in time in life will likely change when either you get married or one of you as a married couple passes away. You need to be prepared for that. Hey, if you want these videos, this is number 2 in a series. If you've missed them, merely go to fegtaxpack.com or call the office. You know the number. You can also go to 833-TAXPACK if you want to have this information passed on to you in a written form, as well as being able to send to friends and family and people that you know. Again, that's fegtaxpack.com or 833-TAXPACK. We're more than happy to get you the previous videos in case you've missed them, as well as our tax package that we send out each and every year. Have a great week. I'll see you again soon.